high income Americans are even broker than ever. Hello guys, how you doing? This is James. Today we're going to talk about our high income earning Americans and how they are feeling worse financially than ever before. But before we begin, I would just like for you guys to like, share, comment if this video and these type of videos resonate with you. I'd love to hear your suggestions, but now let's go ahead and get into it. So this video is coming based off an article that came out by CNBC in which VantageScore did a report on high income earners and how their financial burden has been doing. So this article, CNBC, higher income American consumers are showing signs of stress. Now, I'm not going to read the whole thing, but the main point is delinquency rates for borrowers with incomes of $150,000 are near their highest level in 5 years, according to a new study by VantageScore. Consumers are being cautious with credit. Credit utilization has dropped in December last year, and we'll talk about that a little bit later too as well. So let me just read a little bit from here. Inflation, job concerns, and already high interest rates are putting the squeeze on many American consumers. Now, even high earners, defined as people with incomes of $150,000 or more, are showing signs of stress. These borrowers are increasingly having trouble meeting payments on credit cards, auto loans, and mortgages. The delinquency rate among high earners is near a 5-year high, rising 130% over the last 2 years, from January 2023 to December 2024, according to a new report by VantageScore, a national credit company released early to CNBC. Man, that is a lot. So what is going on? So according to this article, is the borrowers are increasingly having trouble meeting payments on credit cards, auto loans, and mortgages. So what are the things about credit cards, auto loans, and mortgages? They all have interest rates. And now interest rates have been going up. So the costs of these expenses have been going up, which has been eating at high income earners' pockets. It could be two things that it's very important what I see from them too as well. One is from lower income earners who aspire to be more high income earners, that what I said before, that they believe that all their financial struggles are going to disappear. And the problem when they make the six figures, and the problem with that is that if you don't start to try to fix your financial problems, and I'll talk a little bit more about financial problems and a quick thing that you can go ahead and do to help you, better help you with those financial troubles. But one of the things is that if they're not focusing on fixing their financial struggles now, when they're not in maybe the highest income potential that they want, those problems are going to lead into when you are that high income earning individual, and is going to have you in problems of financial stress, of being in debt and not knowing how some of these bills are going to get paid. The other thing is that if you are a high income earner, it can also be financially stressing, whereas society has told you that you're at the pinnacle of earning in your career and that you're making all this money, but you're still feeling broke and that you're not making it. So it could be very challenging and stressful, because here you are, on paper you're making all this money, but in reality you're not showing it. And so I know I've seen people who are just down on themselves because this is what they've always been told to do. This is everything that they have been able to work hard for. And they thought like, hey, with all this money is going to be able to have all this freedom. And it's the exact opposite. Now it's becoming a burden. Now it's becoming, death, kind of like a slow death that, that people basically, as soon as they wake up, this is what they think about, is those high bills. So what can we go ahead and do? At least a first step in us, whether you're a high income earner or not, what can you be doing now to help better your finances? And this is not going to be sexy or, hey, you need to go ahead and put this calculation in the map and all that. Well, you will be having to do some calculations, of course. But the main thing that people look over, high income earners and not high income earners, is just tracking their expenses. Yes, I said it. I know it's not the most glamorous thing, but it's very simple. A lot of times people just don't realize that if they are able just to know exactly where their money is going out and how it's coming in each month, they'll be able to go ahead and take better control of their finances. A lot of times, because what happens is all this money is coming in, all this money is going out. A lot of times we're afraid to kind of look in the details of our finances and see and kind of challenge that beast, because there's probably some things, some purchases that we know that we shouldn't have done, and we just don't want to look at it. We don't want to see the damage. We're just going to keep moving. As long as I'm here for the next month, the next paycheck, we'll figure it out then. So what it is about us getting over the fear, or just learning how to go ahead and take control of your finances. So what ways in which you could go ahead and take better control of your finances? As I said, you can go ahead and start looking at your bank statements, credit card statements, and start writing down whether you could categorize those. That may be the long way, but just kind of seeing like, where's your money going to? Look at the different categories. How much is your money going towards like housing or transportation, or the big one is food. Food. How much? A lot of times there's money that you guys could be saving if you're able to track your food expenses. Another way you could do it, you can get different money tracking or budget apps that can help you to better categorize all the expenses. This will especially be beneficial for someone who has like multiple accounts spread out all places. You can go ahead and put them into one thing and let that app be able to help you out. Tavares says, for the most part, consumers are being cautious with credit. While credit card balances rose 2.9% year over year in December 2024, that pace was keeping with inflation. Consumers have some running room before hitting their limit. Overall, consumer credit utilization dropped 1 full percentage point to 51.6%, the second lowest rate in 2024. So that part is a little misleading. And because when you first read it, you'd be like, well, all right, credit card balances may have rose, but the way in which credit utilization, and what credit utilization is just the amount of credit limit that you have compared to the balance that you have. So if I have a credit card that has $1,000 on it and my balance on that credit card is $300, that means you have a 30% credit utilization limit. So what they're saying is that even though credit card balances has gone up, credit limits or the credit utilization has been going down. And that is kind of a fake thing, because banks and credit card companies have the power to increase or decrease credit utilization rates. And the way in which they go ahead and do that is they can just go ahead and randomly give you a credit limit increase without you even knowing. So let's say $3,000, you have $1,000 on that card, and it's, you're consistently paying it. Boom, boom. So you have a 33% utilization rate, right? And so you have this, and maybe it's consistent, and then all of a sudden one day you still have that $1,000 credit card balance, but now your credit card has went from $3,000 limit to a $10,000 limit. Has that happened to people before? Yes. And you don't even know. So now that it was $3,000, so it was a 33% credit utilization rate, and now it went to $10,000, so it's now a 10% utilization rate. So you see what I mean? Like, they could kind of, play with those numbers right there. So I wouldn't give that part a grain of salt and just say like, hey, like they could kind of manipulate, massage that number to kind of make it look a little bit better than what it is. All right, let's continue on to the article. High income earners intend to slow spending. We see a worrying signal recently coming from upper income earners. Their intent to spend is down, and that worries us, given their disproportionate share of discretionary spending in the United States, said Brian Stolby, a senior director at Bain & Company. Yeah, and that's the thing, is that now with all these prices increases and the interest rates increasing, that's just the whole cost of living is just squeezing their discretionary spending. Also, I think what it is that they may have cash on hand, but they are afraid to use it, or they'll just use it as a last resort. For example, there's a Bankrate study out there that says that fewer Americans year over year would pay for emergencies out of savings. So it said that, let me read it here. 41% of U.S. adults would use their savings to pay for an unexpected emergency expense, such as $1,000 for an emergency room visit or a car repair. And this is down from 44% in 2024. So more people are, if there's $1,000 emergency, they're going to reserve for other measures to go ahead and pay for that instead of using that money in their savings account. So as we said, 41% said they pay from their savings, whereas 25%, so that's 1 out of 4 people, said that they will finance it with a credit card and pay it off over time. And so now there's going to be even more. So that $1,000 expense may end up, after they're paying it off, being $1,200, $1,300 over the life of that balance. So what can high income earners do to not feel the sting of this financial stress? Well, we already talked about one is taking control of your finances. So just making sure that you're tracking your income and your expenses, and you knowing how much in discretionary spending that you have each month. Is that a positive or is that a negative? And what can you do to make sure that it is a positive so that you can go ahead and save? Another thing that you can do is stop using, or really limit the use of, the credit cards and come up with a debt repayment strategy. A lot of times, a lot of people, what they do is pay just a little bit more than the minimum payment on each card and then think that's going away. But you doing that, it's making the problem, even though you're not realizing it, it's making the problem even bigger. So what you really need to do is come up with some type of credit card debt repayment strategy if you're someone that's in one of those financial holes. Also, other expenses like auto and mortgage, just make sure that the best thing that you could be doing is that if you're looking for a home, that you're trying to find a home that is affordable to you. Remember, you don't have to get your dream home all in one shot. Your home is your foundation. You don't want it to be more of a burden than it is your foundation. Auto loan too as well. You really need to think, especially maybe now, is it worth going and purchasing a new vehicle or trading up to a new vehicle? What can you do? Maybe are there better refinancing options with your local credit union compared to whichever auto loan company that you may have used when getting the car? So it's just a lot of times it's about rate shopping. Whether that's for the auto loan, car insurance too as well, that's been going up. Even homeowners insurance, that's been going up too as well. So like a lot of times, guys, and I know that we're in an economy that's not in favor of us, just the regular consumer over here. So we have to try to do what we can to, in our position, to better ourselves. And I believe that if we are able to kind of follow those things that we talked about, especially if anything, just one of them, at least just tracking your expenses, I believe it could really open up your eyes and just be a real good start for you to take towards your journey to financial success. Okay, guys, that's it. What are your thoughts on this article and high income earners feeling broke? Is it something that you believe? What do you think that they're doing? Or if you're a high income earner and you're feeling like this, let us hear your thoughts. I'm James. As I said before, don't forget to like, share, comment, subscribe. If this video has resonated with you, I hope it does. And I will see you in the next one.